Hi traders, Sam here. Hope you're doing well. We have seen this huge rally so far with Bitcoin, and now we're seeing the results of overbought conditions, and we like to explain what is likely to happen or what's happening at the moment, especially around the 73 and 75k range. And if you look at the chart, I have an explanation with 1.414, although it's not easily identified. It can be done. Our reference point was taken from here. So when we look at the bottom of wave 2, and then we're looking for wave 3, we use this as wave 1, wave 2 of this new cycle. And when we do that fib extension using that method, actually from there to there, we get this Fibonacci here, the 0.618, the 1, and we had confluence with that being a resistance. Then 1.272 was also confluence, and therefore with the 1.414, we've eventually overseen the overbought conditions. With this indicator, we get the crossover with the indicators, and then we get this bearish divergence or this downward momentum. And this is a daily trade or daily chart. So we can see from a Fibonacci perspective and from the indicators that we were overbought conditions. And if you look at this chart from a certain perspective, we broke out of a channel and we're on the top half of the next channel. And you can explain a lot of things that make sense. Looking at the moving averages, which is another telltale sign. We had a good trend. Let's just come to a small time frame so it could be more clearer. And what I've done is I've added this Fibonacci to find a relative good level. But what we can see when we just apply the principles for this, the moving averages were doing the job until they were broken and then dropped. However, it's touched our naked point of control for the weekly, and we got the response we wanted. So we've entered along here. But it's not to be looked at from a long-term perspective. On this chart, we have this one, which is the 10. It's the 7. This one here is the 21 daily moving averages. And I feel comfortable that this might be able to come down here, but at the same time, also comfortable that this might hold on this level and then range. I do believe that we are more likely to range than go further down. Now, while I'm saying that, because overbought conditions, having a 11% pullback is fine. And if you look at this from a day or 12 hour, maybe, yeah, I suppose that's good enough. Actually, the daily will probably do the job. If you look at it, we have two scenarios potentially. Basically, moving further down to this base. So from a Wyckoff perspective, this is overbought conditions, and we're going to look for reaccumulation structure. And it wouldn't surprise me that we come down here, then go back up, range around whatever the case may be. It might be a symmetrical triangle. It could be an inverted head and shoulders type of thing. Yep, and then we go back up. So I do feel like we're going to spend a bit of time around here. And it wouldn't surprise me also that we blast through it as well. If you look at the past, not that we can say we can use as a reference, when we get overbought conditions like that, having a pullback is nice to a significant level, and then we get this type of movement. So we could just potentially do that, and then just up like that. Can't tell you what time frame, but I am bullish, and I've taken it long. And if it drops more, I'm more comfortable with the 20 moving average. Here are the two important ones, and they're the weekly. The 10 and the 21 weekly moving averages. If we lose that, then we become bearish. For the time being, Bitcoin or all the traders need to keep this level up from this level above. So if we lose that, that is a bearish sign. And you can see from there, that is a buying opportunity there. So anything that comes down here is a buying opportunity, and I would think that would take the place. We've taken the next level of liquidity. Let's go to a smaller chart. That'd probably make it easier. So what we've done here is put a rising wedge, and it's got merit. So we had our reference point, reference point, reference point. And so the moment we broke that, we dropped hard. So this was valid just by the behavior. Also, we got 1, 2, 3, and it's a wedge. And so with the Fibonacci that we spoke about, the extension, and this topping off structure, we were sure that it was going to drop to this level, but we could also have a fake out and just continue on. So we didn't short it. In hindsight, we should have taken that short. And you can see the neckline along this level. Actually, let's just clean this up a bit. What you can see here is when we use our fixed range volume, right, we have the naked point of control and we've got a SFP. That was our entry to go short. I didn't see it. And this was a swing failure pattern as well to that level of interest. So you can see the next level that we did this fixed range, we had our point of control, and it also lines up with the weekly, also the volume area low and the volume area high. And so once we get above this level, the volume area high, we should actually relabel that. So this range, if you know about naked point of controls, once it's tapped, it's no longer applicable to use it. So we tapped that, and that was our sign to go long, and people did. But we found our range, and then obviously that was a good shorting position because that's like a rising wedge back test. That was a perfect entry. I wasn't keeping it. Today's Friday, and a busy day on Friday. I don't really look at the charts unless I've got free time somewhere. But yeah, today that was a golden opportunity, and unfortunately, we don't have that opportunity to trade all the time. Similarly here, this methodology, we had the blue line got tapped here. So that was the initial one. And the second one was the naked point of control, slightly lower, taking out the liquidity from, basically taking all this liquidity out, all the longs going here. This took all them out. Yep. And then now we just took out furthermore. Here is a level of liquidity. We spent a bit of time here. Actually, that was there. Okay. Didn't quite take it out. And if you look at our 10 and 20 moving average on this chart, it might just play out. The 21 moving average on the daily is a good support line. And then obviously the weekly, if there was a pullback, but I don't think that's going to happen at all. I think this one here is sufficient. You can see here on the daily, there's a lot of support. And so I thought it might come back a bit more and then go further up and then just play that range for a while and then back up. So could have that type of scenario. Still on the cards. When we look on the smaller time frame, this is a wedge. That was the original target of a wedge, first target. So if you get a breakdown, that will be the first target. We got that. And then obviously drop down to second target. The third target, the worst case scenario, is down here, or actually there. So that is our third target. It might come down there if it plays out the wedge fully. I don't think that's going to happen, but you never know. So the 61 to 60 range to 63 is probable, and when you look at it from Fibonacci, it does make sense that there is some potential. Here we're going to find immediate resistance. Here I think when we use that as a reference to this bottom or this bottom here, Fibonacci, golden ratios there. So that will be a shorting position because that was a resistance layer before, bit of support, as you can see. I don't know why we're not getting that. Let's go back. And if we look at the bigger picture, you can see my Fibonacci from there to there to there. We've got the 1.414. And in some cases, if I'm not sure how I got that, okay, that's the top all-time high, top. And this is my thinking as well. If that is all-time high, and we break the all-time high, I think the whales wanted people to FOMO in, and basically a lot of people going in the longs. And once it was established, they wanted to push it down and then take out the liquidity. It was a game that they let it play out, and it makes sense. So until we regain that level on the daily, we can't be bullish. We could potentially go further down, and I gave you my reasons for it. Let's have a look at my simple template from this one here, particularly. See if it comes into play. Yeah, so here we go. This is that. I would have thought this would moving average is coming as well. So what we've done with a fixed volume, we can say there to there. It did play its role there and there. Now, if we were to drop further, I'm comfortable with this. This is the 21 daily. And if we were to put the Fibonacci onto it, just to the previous bottom here, it's got the 0.618. So here is a good position to buy. If this was to slip through, I would think that that is a B, and a C correction. And then what we have is the base. From a Wyckoff perspective, that is the base. So it might slip a bit further and then go back above these moving averages. And then you can imagine that, okay, that's a buying climax. That's our secondary test. We'll get a move. If it's really bullish, it will continue. Yep, make new highs, or we make a slightly higher, take out the liquidity, and then come back down. So I'll be looking to short there if I get the right candles, and then we see what happens with the range. But I think we have a higher lows, and we potentially that'll be an ideal situation where the moving averages keep coming through, and we get those shorts because that's established that there's a strong resistance now. We might get a wick SFP, and we might be here for a while before we break to the upside. I don't think this is going to happen. Or we have a different type of formation in the making where it could be that kind of triangle or whatever the case may be. But we're in a good condition. I have no fear about losing these levels. You can see from the macro the 21 moving average, and then the weeklies come into it. And I don't think that's going to happen at all. If you look at the charts in the past, you see at times where we get this strong move, we get a pullback. It doesn't really fall back. Look at those moving averages, they hold it up. So we got those in play. It could be very similar to this, where it just goes around. So if that's a strong resistance, you can see how he played it out. We had a rising triangle, maybe even some dodgy stuff like the liquidity. This one here took out the liquidity for a lot of it, and then went up, and it met its full-on resistance. So we have a formula that seems to be working, and we could be here for a while. So learn to trade this range, and that's what we're going to do. We're pretty good at it now, and at times it's the implementation that we're not around. If it's during the night when we're sleeping, because we're in Australian time, we miss out, but we tell the people what to look for, and swing failure patterns is what we look for trading in the range. We are macro bullish. That was our opportunity to short. Now this is an opportunity to go long. Once we break this moving average, you can see what happens here. Once we break it, we go further up. Doesn't mean it's going to always go. So we have a chance. I think once we break that level with this moving average, we will hit something of a Fibonacci level and then come back down, and then we'll see what happens from there. But yeah, stay bullish. I think that's done. Consider support. This is a 30-minute. This is a bottoming formation, failed auction, very similar to that, just on a bigger scale. And I think we'll come back up, but we're not going to pass this anytime soon. We might just get that. That is even more bullish than I expect. But we might just get we might get a inverted head and shoulders, huh? So that is very possible as well. Or it could be on an angle. Time wait and see. I laid out a lot of the possibilities, and even this one here is a rising wedge. There is definitely more further down potentially. Like I said, if it was to come down here, it's perfect because this is a strong demand level. We've got this as well. So this is where you really load up and then poof, back up again. I'm going to leave that, guys. I hope it gives you some direction. Please give me a like and share. I'll talk to you soon. Cheers.
There you have it. Please give Sam a like, share, and subscribe to his channel to support him for doing more of these posts.